All right, guys, we are now looking at question number 9. Question number 9 is asking us a very simple question: the method of inventory costing, in which direct manufacturing cost and manufacturing overhead cost. Meaning, when I say the word direct manufacturing cost, when I say the word direct manufacturing cost, what is the meaning of direct manufacturing cost? Direct manufacturing cost means your variable manufacturing cost. And what is the meaning of manufacturing overhead cost? Manufacturing overhead cost generally refers to both the variable as well as the fixed overhead of manufacturing. Both variable and fixed are considered as inventoriable. What is the meaning of inventoriable? Inventoriable means which of these will form a part of the cost of the closing stock of finished goods. So please try to understand, and you already know this answer, that under absorption costing, the variable or the direct manufacturing cost, the variable or the direct manufacturing cost. What is this variable or direct manufacturing cost? It is direct material, direct labor, and direct expenses. Point number A. And point number B, both the variable as well as the fixed manufacturing overheads, both A and B, are included in the valuation of the closing stock of finished goods. Whereas under marginal costing, only the direct manufacturing cost and the variable manufacturing overhead cost are included. Only A and B are included. So marginal costing के अंदर we do not consider what? We do not consider fixed. So this is not in marginal costing. So what are they asking us? Both variable and fixed are a part of the cost. What is that method? That method is absorption costing. That method is what? That method is absorption costing. Now we move over to question number 10. Let's take a look at question number 10. Interesting question. The following information relates to 2 years of sales and production for the Gaudi company. For 2001, they have given us number of units produced, number of units sold. The variable manufacturing cost is given, the fixed manufacturing cost is given. 2002, they have given us the number of units produced and the number of units sold. Assuming that there is no beginning inventory, means opening stock is zero in 2001, the net income will be lower under absorption costing than under direct costing. So basically, if I see these options, these options are such that they are comparing profit under absorption versus your profit under your marginal costing. This is what this question is all about. So basically, if I'm going to be dealing with this particular aspect, I need to have one concept very, very clear in my mind. And what is that concept which I need to have very, very clear in my mind? The concept is, where the closing stock is greater than the opening stock, in this scenario, the profit under absorption costing is going to be more than the profit under marginal costing. And where the opening stock is going to be greater than the closing stock, in this scenario, the profit under marginal costing is going to be higher than the profit under absorption costing. This is one thing that we need to accept. Now we are looking at what year? We are looking at 20x1. Now please try to understand, in the year 20x1, it has been clearly told to me that there is no beginning inventory. So can I say that my opening stock OS is equal to 0 units? How many units? 0 units. But when I take into consideration my closing stock, please see, and common sense, you will agree with my statement that beta opening stock is 0 plus your production, which is 40,000, minus your sale, which is 36,000. What will you be left with? Closing stock, which is 4,000. So what is the closing stock as far as I am concerned for 2001? The closing stock is 4,000 units. In 2001, I can clearly see that my closing stock is greater than my opening stock. Obviously, the profit under absorption is going to be higher. How much higher? Closing stock minus opening stock multiplied by fixed manufacturing overheads per unit. Now, please try to understand that in this question, the fixed manufacturing overheads absorbed. This is fixed manufacturing overheads absorbed. Please remember this. So if you want, we will also write that down. Fixed manufacturing overheads per unit absorbed. ABSORBED, absorbed. Now, here please try to understand that my fixed manufacturing cost is 4 lakhs, and in that 4 lakhs, I'm making 40,000 units. So, can I say that my fixed manufacturing overheads are nothing but 4 lakh dollars divided by 40,000 units. Closing stock minus opening stock. What is my closing stock? I just calculated 2 minutes ago that my closing stock is 4,000. So this is nothing but 4,000 minus 0 multiplied by 4 lakh divided by 40,000. So this is nothing but 4,000 multiplied by 10. And what is this? This is dollars 40,000. Closing stock is greater than opening stock. So profit under absorption is greater than profit under marginal. Sir, please write the statement. The statement is in 20x1, net income will be dollars 40,000 higher under absorption costing than our marginal or direct costing. Now let us see our alternatives. What are they saying? 44,444, they are saying lower under absorption. No. 40,000 higher, they are saying under absorption than under direct. 44,444, they are saying higher. This is wrong. 40,000 lower under absorption is wrong. It is 40,000 higher under absorption costing than it is under your direct, that is your marginal costing. So your answer is option number B, and it has been solved over here. We go to question number 11. Question number 11 asks us that absorption, that is absorption, full absorption costing and variable costing fundamentally differ in their treatment of which cost? They fundamentally differ in their treatment of the fixed cost, because fixed cost is inventoriable in absorption costing and it is a period cost as far as absorption cost, marginal costing goes. So please remember, write like this in your notebook, that when it is fixed, right, when we're talking about fixed, right, please try to understand when we're talking about fixed manufacturing. So write it like this. Just draw this chart, pause your video, write it like this. Fixed manufacturing, write down absorption. Under absorption, write down product. And into bracket, write down inventoriable, मतलब closing stock का हिस्सा. Write over here marginal costing and write over here period cost, मतलब inventory का हिस्सा वो नहीं बनेगा. So your answer over here is obviously option number A, fixed cost. So we are not writing that in our notebook over here, the notebook PDF which you are going to get at the end of the lecture. We will directly go now to question number 12. Let's observe question number 12. Question number 12 is another theory question. So let's quickly take that into consideration. A quick update for my students. Beta, 60% of your paper sometimes comes theory. I have observed US CMA exams for some of our students. They have come up to me and said that 70 to 80% of their exam has been theory. So please take your theory questions very, very seriously as far as US CMA 1 and 2 are concerned, because a good amount of questions can certainly be theory questions in your examinations. Question number 12 of 25, absorption costing and variable costing are two different methods of assigning cost to the units produced. Absolutely correct statement. Of the 5 items listed below, identify the one that is not correctly accounted for as a product cost. As a what cost? As a product cost. Let us pay attention. What is right? What is wrong? So I'll make two columns. I'll make absorption costing and I'll make over here marginal costing. Let us see what we are dealing with. Insurance of factory is a part of product cost under absorption, but not under variable. It is absolutely correct. We are talking about insurance of factory. But insurance of factory in itself, what is it? Insurance of factory in itself, it is a fixed manufacturing cost. Fixed manufacturing cost under absorption are product, whereas under marginal they are period costs. So option number one is a correct statement. I don't see anything wrong in option number one. Now let me go to option number two. What are they saying? So direct labor cost is a part of product cost under both absorption and variable. Absolutely correct. Direct labor is again a variable manufacturing cost. It is a variable manufacturing cost. Therefore, under absorption, it becomes a product cost, as well as marginal also, it becomes a product cost. So option number two also, I don't see anything wrong in the option that is written in the question. Now I come to option number three, packaging and shipping. Packaging and shipping is a non-manufacturing expense. Please try to understand. Packing and shipping. Sir, please categorize this. Use red color, highlight it as many times as you want. But please pay attention, sir. This is a non-manufacturing cost. A non-manufacturing cost under absorption will be period, and under marginal will also be a period cost. I want you to consider this. What are they saying? Packing and shipping cost as a part of product under both absorption and variable is wrong. This is not correctly classified. This is not correctly classified. Identify the one that is not correctly accounted for as a product cost. This is not correctly accounted for as a product cost. It should be a period cost, and we have clarified that in our notebook solution, which you can see adjacent to our screen. Let us go to the fourth one. The classification is important. Packing and shipping cost. Okay, done. Now option number D, manufacturing supplies. Please try to understand. Manufacturing supplies. But manufacturing supplies are a variable manufacturing cost. Under both absorption, they will be product, as well as marginal also, they will be a product cost. Therefore, for question number 12, your option is answer number C. And every option we have discussed and we have classified, not just like some idiot. We are only taking the main answer and discussing it. सारा question का हम लोग ने एक डिटेल और अच्छा नोट बनाया है. प्लीज मेक श्योर कि आपके वर्किंग में भी ये नोट्स आए. क्वेश्चन नंबर 13 को इंपॉर्टेंट मार्क करेंगे. इट्स एन इंपॉर्टेंट क्वेश्चन. लेट अस टेक इनटू कंसिडरेशन. क्वेश्चन नंबर 13 of 25 says the following production and sales information is from the Folly company. ईयर वन में आपने प्रोड्यूस किया है 12,000 और सेल किया है 10,000. जाहिर सी बात है ईयर वन में क्लोजिंग स्टॉक आपके पास में 2,000 का होगा. ईयर नंबर टू में ऐसा हुआ है कि आपने 12,000 प्रोड्यूस करके 14,000 सेल किया. कैसे वो हो सकता है? क्योंकि ईयर वन के एंड में आपके पास में एक क्लोजिंग स्टॉक बचा है जो ईयर नंबर टू का ओपनिंग स्टॉक बनता है. आपको वेरिएबल और फिक्स्ड मैन्युफैक्चरिंग कॉस्ट दिए गए हैं और आपको पूछा जाता है कि एट द एंड ऑफ ईयर टू नेट इनकम अंडर एब्जॉर्प्शन कॉस्टिंग क्या होगा. बट बिफोर दैट प्लीज पे अटेंशन टू दिस. यहां पर आई एम मेकिंग अ वर्किंग फॉर ईयर वन एंड यहां पर आई एम राइटिंग ईयर टू. आई विल स्टार्ट ऑफ बाय सेइंग ओपनिंग स्टॉक. ओपनिंग स्टॉक ईयर वन का दिया नहीं था, नॉट एप्लीकेबल, या फिर जीरो आप ले सकते हो. इसमें आई विल ऐड माय प्रोडक्शन. My production is 12,000. So beta, in hand, how many units do I have? I have an in hand amount of 12,000 units. Out of this, I will subtract my sale. That is my units going out. How much is my sale? 10,000. So what am I left with? I am left with my closing stock of year one. What is closing stock of year one? 2,000. Automatically, it becomes opening stock of my year two. What is the production of my year two? Beta, it is 12,000. So how many units do I have in hand? I have 14,000. And how many units am I selling? I am selling also 14,000 units. So please try to understand, my closing stock over here is going to be zero. At the end of year two, they are asking what will happen. Now please try to understand, at the end of year two, the closing stock is less than the opening stock. If this is the case, then obviously the profit under marginal or direct costing is going to be greater than the profit under your absorption costing. This is an important concept that you need to understand. Now please try to understand my next statement. Please understand that what is the difference over here? The difference will be opening stock minus closing stock multiplied by fixed manufacturing overheads per unit, which are absorbed. Which are what? Which are absorbed. Please try to understand, what are my fixed manufacturing overheads of year two? They are 1,20,000. And how many units have I produced? I have produced 12,000 units, which clearly shows me that my absorption rate is 10 per unit. So I have $1,20,000. to be divided by 12,000 units right here. My opening stock is 2,000 units and my closing stock is 0. Therefore, what happens over here is I get 2,000 multiplied by 10, which is equal to dollars 20,000, which is equal to what? Which is equal to dollars 20,000. As you can see, dollars 20,000 absorption costing income will be lower than marginal costing by how much? By 20,000. So you can write it any which way. You can start off by saying that marginal costing, or you can use the word direct costing also, income is higher than absorption costing by dollars 20,000. Please use your common sense and don't tell me, sir, this option means something else. Arey beta, I am saying marginal is higher than absorption. So obviously income under absorption will be 20,000 lower than direct costing. Your answer is obviously option number C. Your answer is option number C. We go on to question number 14. Question number 14 certainly has to be highlighted as an important question in your entire journey of this particular unit reading. So question number 14, I mark this as an important question. Let's all focus on question number 14. What does question number 14 say? Denham Company began operations on January 3rd, 2001. The standard costs were established in early January by using a normal production volume of 1,60,000 units. This clearly shows that 1,60,000 units are your budgeted units. 1,60,000 are your budgeted units. Please try to understand. Next, however, Denham produced only 1,40,000 units of the product. This is your production. And it sold 1 lakh units at a selling price. So what is 1 lakh unit? This is nothing but sales. And the selling price was 180 per unit during 2001. Variable costs have totaled 70 lakhs, out of which 60% are manufacturing and 40% are selling. Fixed costs are uh, 1 crore and 12 lakhs. Fixed costs are 1 crore and 12 lakhs, out of which 50% are manufacturing and 50% are selling. Denham has no, what are they saying? Denham has no raw material and no WIP. Means there is no inventory whatsoever of any kind of inventories. Okay, the actual input prices of the product and actual input quantities are equal to standard. So there is no material price variance. There is no material price variance. There is no material usage variance also. You will understand this when you do standard costing. But there is no difference at the moment. Denham's COGS using the full absorption costing will be what? Now please try to understand. Please try to understand. My statement number 1. My variable manufacturing cost is how much? Please try to understand. My variable manufacturing cost is, please try to understand, 70 lakhs is my total variable cost. What is 70 lakhs? This is my total variable cost. Out of this, 60% is what? 60% is manufacturing. So 42 lakhs becomes what? Manufacturing. What about 40%? 40% is selling. So that is 28 lakhs. That is how much? 28 lakhs. So this which is manufacturing obviously is going to go to my cost of goods sold. Next, I will take a look at my fixed. Now, with respect to fixed, I want you to be very, very careful. Your fixed total cost are 1 crore 12 lakhs. These are your total fixed cost. Out of this, 50% are manufacturing. If I was to take 50% here, that comes to 56 lakhs. That comes to how much? That comes to 56 lakhs. So this 56 lakhs under absorption costing will be considered for COGS. Now here I need you to pay keen attention with respect to what is being said. Beta, first of all, you need to understand that your variable overheads are going to be 42 lakhs, right, are going to be 42 lakhs. So this entire variable overhead over here, that you can see 42 lakhs, is going to go to your COGS. But when I write over here now 42 lakhs, I want you to know that this is 42 lakhs for a production of 1,40,000 units. For a production of how much? 1,40,000 units. Therefore, on a per unit basis, this is total and this is per unit. On a per unit basis, it is equal to 30. On a per unit basis, how much it is? It is equal to 30. Now I come to my fixed overheads of manufacturing. But please try to understand that my fixed overheads of manufacturing are 56 lakhs on a budgeted number of units, 1,60,000 units. This is the most important concept over here. This gives me my fixed overhead absorption rate. What is my fixed overhead absorption rate? It is total fixed manufacturing overheads divided by total budgeted units. Divided by what? Total budgeted units. So in that case, it comes to 56 lakhs divided by 1 lakh and 60,000. This comes to a total of 35 per unit. Now, please try to understand my fixed overheads absorbed. My fixed overheads absorbed will be my fixed overhead absorption rate multiplied by my actual production, which is equal to 56 lakhs divided by 1,60,000 is equal to 35 per unit absorbed. So this is going to be 35 multiplied by my actual production of 1,40,000. So please do 35 multiplied by 1,40,000. What is the answer that you will get? The answer that we will get over here is 49 lakhs. What is the answer that we get? The answer that we get is a total of 49 lakhs. Therefore, we are looking at variable is equal to 42 lakhs and our fixed overheads absorbed are 49 lakhs. This is giving us a total cost of 91 lakhs, and this is our total cost of production. We have produced how many units? We have produced a total of 1,40,000 units. So my cost of production per unit comes to $65 per unit. Now please try to understand my units sold are a total of 1 lakh units. Please try to understand एक यूनिट को बनाने में 65 खर्चा हुआ, तो जाहिर सी बात है 1 लाख यूनिट बनाने में कितना खर्चा हुआ होगा सर? 65 हुआ होगा सर. दिस इज माय कॉस्ट ऑफ गुड सोल्ड. कॉस्ट ऑफ गुड सोल्ड इज नथिंग बट the cost of production for the number of units sold, beta. That is so simple. What are my number of units sold? Sir, they are 1 lakh units. What is my cost of production per unit? It is 65 per unit. What is my COGS? My COGS is equal to 65 lakhs. I am doing absorption costing. Obviously, the fixed overheads that are going to be considered as a part of my COGS are obviously going to be my absorbed fixed overheads. Absorbed fixed overheads is equal to fixed overhead absorption rate, that is equal to a total manufacturing fixed overheads divided by the total budgeted units, which is nothing but 56 lakhs divided by 1,60,000. Please try to understand normal production volume are nothing but your budgeted units, and your fixed cost total is given to you. It is given to you that actual input prices and actual input quantities are equal to standard. Matlab fixed cost was the standard fixed cost. You wanted your total fixed cost to be 1 crore 12 lakh. Out of this 50%, that is 56 lakh caters to manufacturing. इसमें आपने तय किया कि हम 1,60,000 यूनिट बनाएंगे, एक यूनिट के पीछे 35 रिकवर करेंगे. आपने 1,40,000 यूनिट बनाए, आपने 49 लाख रुपीस को रिकवर किया है। रिकवर करना था आपको 56 लाख रुपीस को। इस क्वेश्चन को अगर जेन्युइनली इंटरेस्टिंग बनाना होगा तो आपको इस क्वेश्चन में पूछी जाएगी अंडर एब्जॉर्प्शन, और वो कैलकुलेट आपको करके दे रहा हूं। प्लीज ट्राई टू अंडरस्टैंड। सर कितने यूनिट्स बनाने थे? योर आंसर इज 1,60,000। सर हमने कितने यूनिट्स बनाए हैं? योर आंसर इज 1,40,000। सर वी हैव प्रोड्यूस्ड, सर वी हैव प्रोड्यूस्ड लेस देन एस्टिमेटेड। सर ये तो बहुत बुरा हुआ। हाउ मेनी यूनिट्स? 20,000 लेस। एक यूनिट के पीछे फिक्स्ड ओवरहेड कितना है? सर 35। सर देखा जाए तो हमारा 7 लैक्स क्या है? सर 7 लैक्स इज फिक्स्ड ओवरहेड्स अंडर एब्सॉर्ब्ड। व्हाट इज दिस? Sir, this is our fixed overheads under absorbed. So that is something that is not asked in the question, but we have done this as an extra service to our students. They are asking us what is the standard cost of goods sold under full absorption costing. We have already calculated that to be beta 65 lakhs. That was question number 14 for you. Question number 14, no doubt about it, an important question. Now I'm going over to question number 15. Question number 15, again I will classify this question as an important question because it is a game of English more than it is a game of any concept. Please pay attention. I give it an important mark in my book, so please pay attention. A company produces disc brakes for mountain bikes. होती है एक किस्म की साइकिल, उसके पीछे के पहिए पे लगता होगा एक किस्म का ब्रेक जिसे बोलते हैं डिस्क ब्रेक. During the current reporting period, the company has a normal spoilage of 700 units. सर कुछ भी कर लीजिए, आप जितने भी यूनिट्स बनाएंगे उसमें 700 यूनिट्स खराब होने वाले हैं. इस पॉइंट को एक्सेप्ट करके चलिएगा. सर एट द बिगिनिंग ऑफ द करंट रिपोर्टिंग पीरियड द कंपनी had 3,400 units in inventory. Opening stock is 3,400 units. Then this company started and completed 5,600 units. Please try to understand this logic and this concept. I have an opening stock of 3,400 यूनिट्स विथ मी. रेडी है मेरे पास इतने यूनिट्स, कुछ भी हो जाए इतने यूनिट्स मेरे पास क्या है? सर रेडी है. सर इसके अंदर मैंने प्रोडक्शन किया. मैंने क्या किया? सर मैंने प्रोडक्शन किया, स्टार्टेड एंड कंप्लीटेड. सर स्टार्टेड एंड कंप्लीटेड का मतलब क्या? सर ये आधा अधूरा बना नहीं है, इसमें WIP वर्क इन प्रोग्रेस नहीं है. ऐसे कितने यूनिट्स है? सर ऐसे 5,600 यूनिट्स है. तो आज की तारीख में मेरे हाथ में 9,000 यूनिट्स रेडी है. सर 4,900 यूनिट्स आर ट्रांसफर्ड आउट, मतलब हमने इन्हें बेचने के लिए आगे भेज दिया है. सर 4,900 यूनिट्स हम लोग ने क्या कर दिए? सर हमने ट्रांसफर कर दिए. और आई कैन यूज द वर्ड सेल. वो कितने थे सर? वो 4,900 थे. सर हमारे हाथ में कितने यूनिट्स बचे? सर हमारे हाथ में बचे 4,100 यूनिट्स. कितने यूनिट्स बचे? 4,100. सर लेकिन एक बात याद रहे, एट एनी पॉइंट इन टाइम ड्यूरिंग द ईयर हमारे 700 यूनिट क्या हो जाते हैं सर? सर ये हमारा स्पॉइलेज होता है, और ये स्पॉइलेज नॉर्मल है, हमें इसकी आदत है. सर इसका मतलब है एट द एंड ऑफ द पीरियड ये हमारा क्लोजिंग स्टॉक होना चाहिए था. ये हमारा क्लोजिंग स्टॉक होना चाहिए था. बट दरअसल हमारा क्लोजिंग स्टॉक कितना है? सर 3,100 हमारा क्लोजिंग स्टॉक है. सर आवर एक्चुअल क्लोजिंग स्टॉक इज 3,100. कैन आई से दैट माय क्लोजिंग स्टॉक इज 300 यूनिट्स लेस देन एक्सपेक्टेड? इसका मतलब है इन 300 यूनिट की बर्बादी ज्यादा हुई है, ये ज्यादा खराब हुए हैं. मतलब 700 तो खराब होने ही थे, हमने और 300 खराब किए. इसका मतलब है कि expected spoilage was how many units? Was 700. Sir, our spoilage is how much? Sir, our spoilage is 1,000. 700 तो किए ऊपर से हमने 300 कर दिए. सर इसका मतलब है हमने एक्स्ट्रा स्पॉइलेज कितना किया? 300. एक्स्ट्रा स्पॉइलेज को बोलने का अबनॉर्मल स्पॉइलेज. एक्स्ट्रा स्पॉइलेज को क्या बोलने का? एक्स्ट्रा स्पॉइलेज को बोलने का एबनॉर्मल स्पॉइलेज. सर द आंसर इज ऑप्शन नंबर सी. द आंसर इज ऑप्शन नंबर सी. विद दिस क्वेश्चन नंबर 15 comes to an end. We jump into question number 16. Sir, question number 16, again a calculation centric question. What are they saying in question number 16? Let us all please pay attention. Sir, question number 16 बोलता है कि a company uses a normal costing system and a predetermined overhead rate to allocate its overhead cost. कितना सिंपल स्टेटमेंट है. हमने किसी तो एक बेसिस के ऊपर हमारे ओवरहेड कॉस्ट को कैलकुलेट किया है. वो डायरेक्ट लेबर हो सकता है, वो मशीन आवर हो सकता है, वो पप्पू कांड डांस हो सकता है, वो कुछ भी हो सकता है, वो हमारा चॉइस है, हम मैनेजमेंट है. सर, द मैन्युफैक्चरिंग प्रोसेस रिक्वायर्स द यूज ऑफ मशीनिंग इक्विपमेंट. सर, हमारी मैन्युफैक्चरिंग प्रोसेस ऐसी है कि वी यूज अ लॉट ऑफ मशीन्स, सो ऑब्वियसली मशीन आवर्स आर इंपॉर्टेंट and machining equipment is the primary driver of the overhead. Sir, the actual factory overhead amount is $450 for the department A, job 120. सर, कहने का मतलब है कि डिपार्टमेंट ए के अंदर देयर इज अ स्पेशल जॉब हैपनिंग. इन दैट वी हैव incurred an actual factory overhead of $450. The production costs are given to us. Sir, the estimated overhead for all our departments, not just for the department A, for all our departments is 2,20,000. And the estimated annual machine hours for all our departments are 20,000. Here I would like to make a very important statement. We will look at it being made in red ink. Sir, please try to understand. The company uses a machine-centric manufacturing process. This much you are supposed to identify from the question. Why? You are becoming US CMAs, man. You are not becoming some, barber or something. So please try to understand. आपको उतना पकड़ना है. हजाम नहीं बन रहे हो भैया, CMA बन रहे हो. You're becoming a professional. वहां पे लिखा है the manufacturing process requires the use of machining equipment. तो मशीन सेंट्रिक है, और वहां पे लिखा भी आगे प्राइमरी ड्राइवर ऑफ ओवरहेड क्या है. सो द कंपनी यूजेस अ मशीन सेंट्रिक मैन्युफैक्चरिंग प्रोसेस. इसका मतलब क्या सर, सारी चीजें मशीन आवर रेट पे लगेंगी. देयरफॉर द कंपनी विल यूज machine hours. What will the company do? The company will use machine hours as the basis of overheads allocation. Here, please try to understand. I will need a rate of overhead, which will be my total overheads in dollars divided by my machine hours. सर, टोटल खर्चा हमें 2,20,000 का हुआ, और ये 2,20,000 के अंदर हमने 20,000 आवर्स के लिए हमारी मशीन चलाई. सर, इसका मतलब ये हुआ कि हमने $11 पर आवर हमारा काम करके दिखाया हुआ है. क्या है हमारा काम करने का रेट सर? $11 पर आवर. प्लीज समझने की कोशिश कीजिएगा कि हमारे इस पर्टिकुलर जॉब 120 के अंदर एक्चुअल मशीन आवर्स 32 लगे हैं. सर, इसमें एक्चुअल लेबर आवर्स भी 21 लगे हैं. इसे हम इग्नोर करेंगे. वी मस्ट इग्नोर दिस. Why the hell should I ignore this? I will ignore this because my manufacturing process is machine centric and not labor centric. I use machine and not the laborer. Had I used the laborer, was it labor centric, I would have given the recovery based on these 21 hours. But now the recovery will be made based on this 32 hours because I am machine centric. So if I have to take into consideration the overheads absorbed, my overheads absorbed are going to be my standard rate, which I just calculated. Rate of overhead is nothing but my standard rate multiplied by my actual machine hours. Sir, my standard rate is $11 per hour and my actual machine hours are 32 hours. Sir, it shows that I have absorbed $352. इसका मतलब ये है कि ओवरहेड पर सर खर्चा we could bear was $352. सर, मतलब पापा ने हमको $352 लेके मार्केट भेजा और बोला बेटा शॉपिंग करना। हमने 450 उड़ा लिए। हमने कितना कर लिया? हमने 450 उड़ा लिए। दिस इज ओवरहेड एक्चुअली इनकर्ड। दिस इज ओवरहेड एक्चुअली इनकर्ड। सर ताकत झेलने की 352 की है, हम खर्चा करके आए 450। सर बहुत बुरा हुआ, हमने 98 का एक्स्ट्रा ओवरहेड बेयर किया। इसे कहते हैं अंडर एब्सॉर्ब्ड ओवरहेड्स। सर क्यों? क्योंकि वी वर सपोज टू हैव एन ओवरहेड ऑफ 352 बट एक्चुअली वी हैड एन ओवरहेड ऑफ 450. व्हाट डिड आई डू हियर? दिस क्वेश्चन पर्टिकुलरली आई विल मार्क एज इंपॉर्टेंट बिकॉज सारे बच्चे इसमें कंफ्यूज हो जाएंगे वेदर टू टेक 32 और 21. प्लीज अंडरस्टैंड दैट इट इज अ मशीनिंग सेंट्रिक जॉब. It is a what job? It is a machining centric job. Since it is a machining centric job, it will go as per the machine hours. It will go as per what? The machine hours. Sir, the machine hours are 32 hours. This 32 hours will be multiplied by the standard rate, saying that आपका काम 352 में होना चाहिए लेकिन आप करके आए 450 में, मतलब 98 एक्स्ट्रा खर्चा किया। सर एक्स्ट्रा खर्चा होने को कॉस्टिंग के भाषा में अंडर एब्जॉर्प्शन ऑफ द ओवरहेड्स ऐसा कहा जाता है। एंड वी कम टू एन एंड ऑफ क्वेश्चन नंबर 16. Let us jump now to question number 17. What does question number 17 say to us? Question number 17 says that the estimated unit cost of a company using the absorption full costing method at a production and a sales level of 12,000 is given to us. Direct material 32, direct labor 20. I want you to pay keen attention to these lines. Direct labor 32, direct labor 20, variable overhead 15, fixed manufacturing 6, variable selling 3, and fixed selling 4. Now please continue to pay attention. The estimated total cost that will be incurred during the month when the production level of 12,000 units and sale level of 8,000 units is there. They are asking you what? They are asking you the total cost. They are asking you what? They are asking you the total cost. Please pay attention. They are asking you a total compilation. Now let us calculate. Let us begin first of all by saying that. Let us begin first of all by saying that my direct material is 32. My direct labor is 20. My variable overheads of manufacturing are 15 and my fixed manufacturing overheads are 6. The total of my variable plus fixed manufacturing overhead is equal to 32 plus 20 plus 15 plus 6. The answer is 73. Under absorption costing, inventoriable costs are variable as well as the fixed overheads of manufacturing. Therefore, I will say that my cost of production Therefore, I will say that my cost of production is 73 per unit multiplied by my production level of 12,000 units, which gives me a total cost of 8 lakhs and $76,000. Next, to my cost of production, I add my opening stock of finished goods, which is nil, and I subtract my closing stock of finished goods. Please try to understand that my closing stock of finished goods is a total of 4,000 units. How? Please pay attention. Opening stock was 0, production was 12,000, sale was 8,000. Obviously, closing stock is how much? Closing stock is 4,000. Please try to understand. So 4,000 units under absorption costing will be valued at cost of production, that is 73 per unit. So my closing stock comes to 2 lakhs and 92,000 to be subtracted. What I am left with is 5 lakhs and 84,000. This is nothing but my cost of goods sold. This is nothing but my cost of goods sold. To cost of goods sold, I will add my selling and admin and my distribution. in this, I can see that my variable selling, please try to understand, variable selling is 3 per unit. So it will be 3 per unit sold, which is equal to 8,000 units. So it will be 24,000. And don't make a mistake, my fixed is 4 per unit, but it will not be for sold. It will obviously be for the units budgeted to be manufactured, and that is going to be 12,000. Always remember, fixed cost go on budgeted, variable cost go on actual. So here your cost is going to be another 48,000. So when I add this up, my total cost comes to 6,56,000. How much does my total cost come to? My total cost comes to 6,56,000 over here. Now please try to understand. Please try to understand. Here we need to give one thing due importance. Please take a look over here. 8,76,000 is my cost of production. Now 656 is my COGS onwards. 656 is my COGS onwards. So please look here. See how I'm presenting so that there is no confusion. See, first of all, see what is my cost of production. My cost of production is 876. My cost of production is 876. They are asking me what is my total cost. They are asking me what? They're asking me my total cost. So my total cost, they are not asking me my gain. They're asking me my cost. So my total cost will be cost of production. My cost of production is how much? It is 876. My total production is 876. And along with this 8,76,000, what other cost do I have? Please try to understand. They're asking me my total cost, not my cost of goods sold. That is why this will come under my total. 584 is COGS. Ignore it at the present moment. But what is my selling and administrative total cost? This is 48 plus 24. So the total of this under total cost, I will take how much? 72,000 over here. How much will I take? I will take 72,000 over here. So 876 plus 72, my total will be 9 lakhs and 48,000. What will be my total? My total will be 9 lakhs and 48,000. If we go and look over here, our answer is option number D. Our answer is option number D. Remember, they are asking you the total estimated cost which will be incurred in production. They are not asking you your cost of sale. They are not asking you your cost of sale. Please try to understand over here. One thing needs to be clarified over here. Sir, if I'm talking about my cost of sale, if I'm talking about my cost of sale, it is cost of production plus opening stock of finished goods minus closing stock of finished goods, which gives me my COGS plus my selling, general, administrative and distribution, which gives me my cost of sale. In this particular question, 8,76,000 is my cost of production. Opening stock of finished goods not applicable. Closing stock is 2,92,000, which I subtract. My COGS becomes 5,84,000. My selling, general and administration is 72,000, and 6,56,000 becomes my cost of sale. Remember, they are asking you total cost. They are asking you total cost. And when you look over here, you don't even have the option of 656 anywhere. You don't have the option of 656 anywhere. They are asking you total cost. So what will be the total cost? Your total cost of production and your selling, general, administration and distribution. So that will be nothing but 8,76,000 plus another 72,000, which gives you how much? 9,48,000. So that is why your answer is option number D. Remember, they have said total cost and not cost of sale. If cost of sale was asked, your answer would be $6,56,000. Please be careful with respect to this. Let us go now to question number 18. Question number 18, an excellent question which is related to one of our earlier questions actually. In this question, we are straight away going to assume the FIFO method. Please let us take a look at question number 18. So Superflight expects April sales of its deluxe model airplane, the C-14, to be 4,02,000 units at $11 each. Each unit of C-14 requires 3 purchased components below. But these 3 purchased components are nothing but your direct materials. What are your direct materials? A9, B6, D28. The purchase cost is given. And for 1 unit of C4, how much is needed is also given. The factory direct labor and variable overheads are $3, whereas the fixed factory overhead is 1. And the production level is 500,000 units. Superflight plans the following beginning and ending inventories for the month of April, and it uses standard absorption costing for the valuation of its inventory. So what does it use? So for C14, it says that the opening stock is going to be 12,000 and the closing stock is going to be 10,000. Now please try to understand where we are coming from. Here we need to understand that we are looking at a production level of 5 lakh units. That is what is our fixed overheads. But when we take into consideration the sales is happening of 4 lakh 2,000 units. So first of all, please try to understand when I talk about my finished goods, when I talk about my finished goods, right? Please focus. When I talk about my finished goods, my opening stock is equal to C14 is my finished goods. So my opening stock is equal to 12,000 units. In this period, I have made a production and the production is of 4 lakh 2,000 units. No, sir, the production I don't know, but my sales are 4 lakh 2,000 units. So opening stock plus production minus sale of 4 lakh 2,000 units, I end up with a closing stock. And what is my closing stock? My closing stock is 10,000 units. Please try to understand. Please try to understand that in this particular scenario, we are looking at opening stock plus production minus sale is equal to what? Is equal to closing stock. Further, they are saying that assume they are going to manufacture 4 lakh units. Assume they are going to manufacture what? 4 lakh units. So please try to understand. Please try to understand. Over here, my production is of 4 lakhs. So I am looking at 4 lakh 12,000 units in hand, out of which I am selling 4 lakh 2,000 units. So my closing stock says 10,000 units. Now over here, I am manufacturing how many units? I am manufacturing 4 lakh units. The book value of the planned value of the April 30 inventories, they're asking us the book value of the closing stock of the finished goods. They are asking us the book value of the planned April 30 inventories is what? Now they've given us the values over here. They've given us the values over here. Please try to understand. Please try to understand. First of all, book value means cost. Book value means what is the cost for us. Now, with respect to our raw materials, with respect to our raw materials, what are the inventories that we have? We have A9. How many units? We have A9 with a total of 9,000 units. 9,000 units at the rate of what? At the rate of 0.5 per unit. It comes to how much? It comes to 4,500. Next, I have B6. B6. How many units is my closing stock? It's 10,000. How many units? 10,000. So 10,000 units multiplied by. What's the cost of my B6? My B6 is 0.25. My B6 is 0.25. Which is equal to how much? Which is equal to 2,500. Next, I'm looking at D28. What is D28? What's my closing stock? My closing stock of D28 is 6,000 units. Please multiply this by 1 per unit, which comes to how much? Which comes to 6,000. So if I take this into consideration, what is my raw materials closing stock? My raw material closing stock value is equal to 4,500 plus 2,500 plus 6,000. That comes to how much? That comes to a total of 13,000. They are asking us the value of the book value of the planned 30th April inventory. Now please try to understand what is my inventory of C14. My inventory of C14 is 10,000 units. Now this is where the fun is. This is where the fun is. Now I am looking at finished goods closing stock. What am I looking at? I am looking at finished goods closing stock valuation. First of all, please pay attention. My finished goods are valued under absorption costing at cost of production. My cost of production will comprise of direct materials. My direct material for C14, my direct material for C14 are A9, B6 and D28. Please try to understand. I need 1 unit of what? 1 unit of A9. I need 2 units of what? I need 2 units of B6 and I need 3 units of what? I need 3 units of D28. Please try to understand. This is what I need for 1 unit of C14. For 1 unit of C14. Now, beta, please let's look ahead. Let's look ahead and let us understand that when I close my books for April, I am left with 10,000 units. I'm left with how many units? 10,000 units. So, if I am taking into consideration 10,000 units, I need A9 how much? I need A9 10,000. I need B6 how much? I need B6 20,000. I need D28 how much? I need D28 30,000 units. So from this perspective, what do I need in direct material? My direct material value will be 10,000 of A9, 10,000 of A9 at the rate of 0.5, which is equal to 5,000. 20,000 of B6, this is A9, then there is B6, 20,000 of B6 at the rate of 0.25, which is how much? Which is equal to again 5,000. Then I'm looking at D28. I have 30,000 of D28 at the rate of 1, which is equal to how much? Which is equal to 30,000. So my direct material value in this is 40,000. Now I come to direct labor and variable overhead. Direct labor and variable overhead is 3 per unit as is given in the question. It is how much? It is 3 per unit. Please try to understand. Now when I say that it is 3 per unit, it is 3 per unit for how many units? Obviously, it is 3 per unit for 10,000 units. So this will become how much? This will become 30,000. And finally, I have my fixed overheads. These are direct labor and variable overheads of what? Manufacturing. And I have my fixed overheads again of manufacturing, and they are 1 per unit. Now for how many units? 10,000 units, because that is my closing stock. So this is another 10,000. So what is the value of my closing stock of finished goods? My direct material value is 40,000, my direct labor value is 30,000 and my fixed overhead value is 10,000. ऐसा करके 80,000 is my finished goods closing stock value. So what is going to be my total inventory value? My total inventory value is going to be raw material plus my finished goods. What is the value of my raw material? Total value of my raw material, it is 13,000. And what is the value of my finished goods? Sir, it is 80,000. So what is my total inventory valuation? My total inventory valuation is a total value of 93,000, and that is your option number C. And that is your option number C. Let's go now to question number 19. But before I go, please try to understand. When I did C14 का valuation, मुझे इसमें क्या लगेगा? डायरेक्ट मटेरियल लगेगा. तो इसमें A9, B6 और D28 का जो वैल्यू लगेगा वो, फिर मुझे इसमें डायरेक्ट लेबर लगा. डायरेक्ट लेबर एट द रेट ऑफ 3 पर यूनिट फॉर हाउ मेनी यूनिट्स? 10,000 यूनिट्स. फिर मुझे इसमें फिक्स्ड ओवरहेड लगा 1 पर यूनिट फॉर हाउ मेनी यूनिट्स? 10,000 यूनिट्स. और इसका पूरा कैलकुलेशन हमने यहाँ पे ऑलरेडी देखा हुआ है. So this is why this is the value of C14. Now let's go to question number 19. Question number 19, for external reporting purposes in financial statements and tax, which costing method is used? Absorption costing method is always used for external reporting purposes. Question number 20. Question number 20 asks us, which of the following statement is correct regarding absorption and variable costing? Gross margin are the same under both methods. No, they cannot be the same under both the methods. Please try to understand that cost of goods sold is going to be different, because the valuation of cost of goods sold. See, please try to understand when I'm talking about over here question 20. What are they saying? They are saying gross margin is the same. See, what is gross margin? Sale minus cost of goods sold is equal to gross profit. Please try to understand when I'm calculating COGS, how do I get it? It is cost of production plus opening stock of finished goods minus your closing stock of finished goods. Please understand this. Under absorption costing, when I say closing stock of finished goods, it is going to be variable plus fixed manufacturing overheads. And when I talk about only marginal costing or variable costing, it is only going to be variable manufacturing overheads. So the value of finished closing stock of finished goods is going to be different. Obviously, the overall COGS value is going to be different. So how can the gross profit be the same? So this is wrong answer. Variable manufacturing costs are lower under variable costing. This statement does not make any sense. If finished goods inventory increases, absorption costing would result in a higher income. Please try to understand what they're trying to say. They're trying to say if closing stock is greater than opening stock, obviously profit as per absorption costing is going to be greater than profit as per your marginal costing. But if your opening stock is going to be greater than your closing stock, your profit of marginal costing is going to be greater than profit as per absorption costing. I hope you are able to understand. Your answer is option number C. Your answer is option number C. But we have to also understand, because they are asking us which is correct. So C is correct. But D, overheads are treated in the same manner. No, they are not treated in the same manner. Under absorption costing, both variable and fixed are inventoryable. But under marginal costing, only variable are inventoryable. So option D is wrong, A is wrong, B is wrong. Option C is the right option. That is question number 20 for you. Now we jump into question number 21. Question number 21 again appears to be a comprehensive calculation. Let us see what question number 21 is asking us. Question number 21, let's pay attention. What does question number 21 say? Question number 21 says the company produced 1000 units and sold 900 units, both as per its budget. Okay. There is no beginning or ending WIP and no beginning finished goods inventory. So let me first of all write this down, that my opening stock of finished goods is 0. My production is 1000 units and my sale is 900 units. Therefore, my closing stock of finished goods is 100 units. I hope you are able to understand this. Now, please go ahead. Budgeted and actual fixed cost are equal, means there is no variance. All variable manufacturing costs are affected only by the volume of production, means as your production will increase, your variable cost will increase, which is a common sense. And all variable selling costs have to be influenced by sales volume. जितना बेचोगे ज्यादा उतना variable selling cost, जितना ज्यादा मैन्युफैक्चर करोगे उतना ज्यादा variable manufacturing cost. कॉमन सेंस का स्टेटमेंट है ये. स्टेटमेंट यहाँ पे लिखने की कोई जरूरत ही नहीं थी क्वेश्चन में, बस एक स्टेटमेंट बढ़ा दिया है आपको कंफ्यूज करने के लिए. इट वाज नॉट एट ऑल नीडेड. इट्स अ मीनिंगलेस स्टेटमेंट बिकॉज इट्स कॉमन सेंस. इट्स लाइक सेइंग आग गर्म होती है, पानी गीला होता है, आसमान नीला होता है. स्टूपिडिटी. नोबडी सेज दैट, right? Budgeted per unit revenues and costs are as follows. Beta, the sales price is given to you, the direct materials are given to you, the direct labor is given to you, the variable manufacturing costs are given to you, and the fixed manufacturing costs are given to you. Variable selling cost is given, fixed selling total cost is given, fixed administrative total cost is given. They are asking you what is going to be the operating income. Please pay attention. We begin by stating that my sales in this particular case are going to be 900 units at the rate of 100, and the answer over here is 90,000. What is the answer? 90,000. From sales, I will subtract obviously my cost of goods sold, and I am doing absorption costing. So both fixed and variable are going to be a part of my cost of goods sold. So 30 plus 20 plus 10 plus 5. What is this 30 plus 20 plus 10 plus 5? 30 is direct material, 20 is direct labor, 10 is variable manufacturing, 5 is fixed manufacturing. But so all of this in a toto is going to be a part of COGS. I am going to multiply this by units sold straight away, which is 900, and this comes to how much? This comes to 58,500. Let us check it once. 30 plus 20 plus 10 plus 5 multiply by 900. The answer is 58,500. This gives me a gross profit of 31,500. From gross profit, I will subtract selling, general, administration and distribution expenses. For me over here, first of all, I will go with my fixed selling. My fixed selling is 3,600. I will next go with my fixed admin. My fixed admin is 1800, and I have then my variable selling. Please try to understand that my variable selling is 12 per unit. For how many units sold? Obviously, it's dependent on units sold, so that's 900. So this is 10,800. These costs have to be subtracted from my gross profit, leaving me an operating income of 15,300. Therefore, my answer over here is going to be option number C, 15,300. With this, question number 21, a very simple question comes to an end. But in this question, to me, the most important statement in my heart, in my mind, the most important statement over here was that there was no data given. एक्चुअली सबसे ज्यादा इंपॉर्टेंट स्टेटमेंट ये क्वेश्चन में दिया ही नहीं था. वो स्टेटमेंट ये दिया नहीं था कि कितना अंडर एब्जॉर्प्शन ओवर एब्जॉर्प्शन का स्कोप है, क्योंकि अगर अंडर एंड ओवर एब्जॉर्प्शन होगा तो ओवर एब्जॉर्प्शन आपके कॉस्ट में सब्ट्रैक्ट होगा और अंडर एब्जॉर्प्शन आपके कॉस्ट में ऐड होगा. यही अभी आगे के क्वेश्चंस में समझने वाला कॉन्सेप्ट हमारे लिए आ जाता है. Let us go to question number 22, where this concept can be further tested and experimented with. We are looking at question number 22, a question that we have to mark certainly as important. A manufacturing company is contemplating switching from their current costing approach, which is variable costing. From that, they want to go to absorption costing. Okay. The relevant data for January 2002 is given. Selling price is given. That's 30 per unit. Units produced are 40,000. Units sold are 30,000. Opening stock as is on 1st of January is 0. Therefore, I can clearly stand up over here and say that my opening stock of finished goods is 0. To this, I will add my production. My production is 40,000. From this, I will subtract my sale. My sale is 30,000. I am left obviously with closing stock, and my closing stock is 10,000. Please try to understand. Next, I have been given my direct materials as 6 per unit, direct labor is 3 per unit, variable overhead is 2 per unit. All these items, my dear friends, are going to be a part of my cost of production. Next, I have been given variable selling and admin, which is not a part of my cost of production. Fixed selling and administrative, again not a part of cost of production, but I have been given my fixed manufacturing overhead of 1,60,000 units. This right here becomes an important aspect for me to take into consideration. Why? Because my production is of 40,000 units, my absorption will be calculated on the basis of the same. So please try to understand. My next statement I'm going to make is for my fixed overheads absorbed. My fixed overhead absorbed are my total fixed overheads, and I will divide this by my total budgeted production. I'll divide this by what? By my total budgeted production. My total fixed overheads are 1,60,000 and my total budgeted production is 40,000. Therefore, my fixed overhead absorbed are 4 per unit. What are they? They are 4 per unit. Now, please pay attention to my next statement. Under absorption costing, my cost of production will include direct material, which is 6. It will include direct labor, which is 3. It will include variable overhead, which is given to be 2, and fixed overheads absorbed, which are 4. So what is my total? 6 plus 3, 9 plus 2, 11 plus 4, it is 15. It is what? 15. Now please try to understand. This is my cost of production for how many units? This is my cost of production for 40,000 units. Now please focus when I say that this will be my cost of goods sold for how many units? Obviously for 30,000 units. Why? Because units sold are 30,000. Now let's try to understand that my sale is for 30,000 units and my selling price per unit is given to be 30 per unit. So what are my total sales? 30,000 multiplied by 30. My answer here comes to 9 lakhs. From 9 lakhs, I will subtract my cost of goods sold. How many goods are sold? 30,000 units are sold. What is the COGS of 1? It is 15. So this becomes how much? 4 lakhs and 50,000. This gives me a gross profit to look at. My gross profit is again 4 lakhs and 50,000. From gross profit, I will subtract all these items, variable selling, and I will take into consideration fixed selling and administrative. So first I will subtract fixed selling, general and administrative, which is 75,000, and then I will subtract from this my variable selling and admin. Variable selling for me is 1 per unit, obviously for the number of units sold, which are 30,000. So I end up subtracting 30,000 from here. So 4,50,000 minus 75,000 minus 30,000. My operating income under absorption costing comes to be 3 lakhs and 45,000. What is my answer? My answer is 3 lakhs and 45,000, and that is my option number B. And that is my option number B. We now go to question number 23. Question number 23 is to be marked as an ultra important question because this has the elements of over absorption and under absorption. I mark this as a very, very important question, and I would like to dedicate extra time to its discussion. Dreaman Corporation uses a standard cost accounting system. During the last fiscal year, the data is given to you. The opening stock of finished goods is 100 units. The production is 700. The sales is 750. And the closing stock of finished goods is 50. The per unit selling price is 200, standard variable cost is 90, and the standard fixed manufacturing cost is 20. When I say that it is 20, please notice that there is an asterisk above this 20, and this asterisk says that the denominator level of activity is 750 units. If the denominator level of activity is 750 units, please try to understand that my budgeted fixed overheads, are, they are going to be 20 per unit multiplied by my denominator level of activity, which is 750. So, which is 15,000. Please try to understand that in this year, I have a budget of 15,000 with respect to my fixed overheads. Now, please understand that while my denominator level of activity is 750, I have produced only 700 units. Please try to understand what are my fixed overheads absorbed. The absorption rate is 20 per unit, and of course fixed overhead absorbed is standard rate multiplied by what? Multiplied by my actual units, so which is equal to 20 multiplied by 700, which is equal to 14,000. Please try to understand that my fixed overheads budgeted is 15,000 and my fixed overheads absorbed is equal to 14,000. This clearly shows that there is an under absorption of 1,000. That there is a under absorption of 1,000 units. How do I say that there is an under absorption? Please try to understand that I was supposed to recover a cost of how much? 15,000. तुम कितना भी मैन्युफैक्चर कर लो, तुम्हें 15,000 रिकवर करना है, बट तुमने कितना रिकवर किया है? तुमने 14 रिकवर किया है. क्यों? क्योंकि जब तुम 750 बना सकते थे, तुमने 700 ही बनाया. मतलब क्या किया? तुमने 50 यूनिट्स लेस बनाया एट द रेट ऑफ 20. मतलब तुमने 1000 का फिक्स्ड ओवरहेड क्या किया? वेस्ट किया. मतलब तुमने 1000 का फिक्स्ड ओवरहेड सिंसियरली क्या कर दिया है? वेस्ट कर दिया है. I hope you are able to understand this particular point. I am going to repeat this point. Please try to understand. You are going to incur 20 per unit on fixed overhead no matter what. आपने सोच के रखा था कि 750 बनाएंगे, तो आपने सोच के रखा था कि 15,000 की रिकवरी करके दिखाएंगे. 20 पर यूनिट के हिसाब से तो आप गए, लेकिन आप 700 ही बना के आ गए, तो आपने 14,000 ही रिकवर किया. आपको वसूली कितनी करनी थी? 15,000 की, पर आपने वसूली कितनी कर ली? ओनली 14,000 की. दिस शोज यू वेरी वेरी क्लियरली दैट यू हैव रिकवर्ड 1,000 लेस. This is nothing but your under absorption. This is nothing but your under absorption. This right here is a very, very important concept. Now they are asking you that there is no price and efficiency variances and administrative expenses are equal. Any volume variance, what was volume variance? कितना बनाना चाहिए था 750, कितना बनाया 700। सर यही तो होता है वॉल्यूम वेरिएंस, यही तो होता है वॉल्यूम वेरिएंस। इट इज रिटर्न ऑफ टू सीओजीएस। मतलब अगर ये एडवर्स होगा, मतलब अगर ये अंडर अप्लाइड होगा तो ये कॉस्ट में ऐड होगा, अगर ये ओवर अप्लाइड होगा तो ये क्या होगा, कॉस्ट में से रिकवर हो जाएगा। अंडर एप्लीकेशन और अंडर एब्सॉर्ब्ड इज अ लॉस, कॉस्ट में ऐड होता है। ओवर एब्सॉर्ब्ड और ओवर रिकवरी इज अ प्रॉफिट, कॉस्ट में से लेस होता है। So how do we take care of this particular question? A rather ultra important question. See, very very simple. प्लीज ट्राई टू अंडरस्टैंड। आपने सेल किया, कितना सेल किया? सर हमने 750 यूनिट का सेल किया है। कितने यूनिट का सेल किया है? 750। सर हमारा सेलिंग प्राइस कितना है? 200। सो प्लीज ट्राई टू अंडरस्टैंड, सेल इज गोइंग टू बी 750 यूनिट्स at the rate of 200. So what is my sales? My sale over here is 1,50,000. So this is 750 multiplied by 200. It gets me to 1,50,000. From this beta, now I subtract my COGS. What all comes in my COGS? In my COGS, it is cost of production. What is my cost of production? My cost of production will include both the variable as well as the fixed. Please understand, my cost of production is for 700 units at the rate of, at the rate of what? Variable as well as fixed. So here it will be how much? 90 plus 20, which is equal to 110. So the total here will be 77,000. To this I will add my opening stock. My opening stock is of 100 units at the rate of 110, and that becomes how much? That becomes 11,000. From this I will subtract my closing stock. My closing stock is 50 units at the rate of my cost of production of 110. Therefore I will subtract 5,500. And please remember, my COGS is not yet complete because it is 77,000 plus 11 minus 5.5. This comes to, this does come to 82,500, but to this I will add under absorbed fixed overheads, and my under absorbed fixed overheads are 1,000. This makes my cost of goods sold 83,500 as point B. So what is my gross profit? My gross profit is going to be my sale which is nothing but my point A over here, which is 150. So it is going to be A minus B. So it is nothing but 1,50,000 minus 83,500. So 1,50,000 minus 83,500, my answer comes to gross profit is equal to 66,500. From this gross profit, please understand, I will subtract all my selling general distribution, which are a total of 45,000, leaving me an operating income of 21,500. Anybody who has not taken into consideration the under recovery addition will be making a huge mistake in this particular question. Under absorption was finally added to COGS. What is COGS? Cost of production plus opening stock minus closing stock. Closing stock is valued at current period's cost of production. And finally, this COGS will become your net COGS only when you are going to adjust the under absorption of your overheads in the same. So with respect to questions like question number 23, we will be uploading a special video only for this question number 23 kind of questions for your additional practice, and that video is going to come very soon in this very same playlist. So please make sure that you are sort of checking it out.